Welcome to Deep Green Capital's overview of 100% equity funding for major assets and projects. We are specialists at structuring and financing large-scale assets and projects for governments and corporations, with equity capital provided by syndicates of global pension institutions. Here are some examples of the types of assets we will fund without using debt. Large assets such as utilities, bridges, industrial and commercial developments, energy generation, advanced manufacturing, data centers, and associated infrastructure, hospitals, healthcare, universities, schools, emergency services, and medical facilities. As you can now see, we can finance most types of large, long-life assets that require a minimum of US $100 million in capital. I will now outline our funding structure and the essential criteria we require for each transaction. For each investment, our Monaco sponsor incorporates a dedicated special purpose vehicle that for our illustration we have called a Monaco Global Pension Fund Syndicate, MGPS. Each MGPS is project-specific or asset-specific, cornerstoned with our Monaco Fund's own capital, and co-invested by a syndicate of global pension and superannuation funds. The MGPS provides 100% of the required capital for either the acquisition and leaseback of an existing asset or the construction of a new large project that are then leased to the lessee sponsor via a triple net lease over 20 to 40 years. The payments made under the lease must be from an investment-grade lessee sponsor, and when that is not possible, a lease payment guarantee will be required from an investment-grade guarantor for the full term of the lease. We must keep in mind that this capital is public pension money, and as such, the certainty of payments must be watertight because retirees are depending on that income. Accordingly, we work exclusively with investment-grade counterparties. That means a lessee sponsor or guarantor must be a government or corporation rated BBB- or higher by S&P, or rated Baa3 or higher by Moody's. This ensures the capacity and commitment to meet long-term lease payment obligations are never in doubt, protecting the retirement savings and quality of life for thousands of people. Under the triple net lease, each payment consists of a fixed coupon yield, plus a partial amortization of the principal amount. The coupon yield is benchmarked against the long-term sovereign bond rate of the relevant currency at inception, and includes a modest annual adjustment linked to inflation to maintain its real value. Throughout the lease term, the lessee sponsor gradually accrues up to 50% beneficial ownership, with the option to convert this to full legal ownership upon lease expiration or prior based on pre-agreed terms. For certain projects or assets, we may also incorporate a profit-sharing mechanism. Once all lease payments and operating expenses are satisfied, any net profits are divided equally with the MGPS. In summary, under the triple net lease, the lessee sponsor bears full contractual responsibility for all associated costs and expenses, including taxes, insurance, maintenance, and operations, effectively managing the asset as if it were their own during the entire lease period. Now for new projects, our 100% funding can also include certain costs incurred prior to financing, such as land acquisitions, development approvals, environmental permits, planning permits, preliminary works, and engineering. These pre-financing costs are built into the total project cost and reimbursed to the lessee sponsor at first financial settlement. This ensures the lessee sponsor has no out-of-pocket exposure at the time of financial commitment. From that point forward, we can fund 100% of all EPC costs provided they are under fixed-price, date-certain turnkey contracts with highly reputable contractors. Every contract must be backed by performance guarantees, completion bonds, and comprehensive insurance. All technical, construction, and operational risks must be fully mitigated, providing both development capital and long-term ownership stability. For existing assets, our structure releases immediate capital without loss of control. We acquire the asset outright with long-term equity, no debt, no refinancing, no leverage, paying full market value. The lessee sponsor continues operating exactly as before. To the public, competitors, employees, suppliers, and customers, nothing changes. Capital unlocked can be used for new infrastructure, debt reduction, share buybacks, fiscal priorities, or strategic growth. During the lease term, the lessee sponsor accrues up to 50% beneficial ownership in the asset. At the end of the lease term or earlier, if there is a refinancing or liquidity event, the lessee sponsor can realize that ownership either by selling it or by increasing their stake to 100% through buying the syndicate out of its shareholding. We appreciate that what we have covered is complicated, but at its heart, our model is straightforward. Unlike traditional borrowing, our 100% equity funding means you have no capital at risk. Eligible pre-financing costs can be reimbursed at first financial settlement, so you recover the expenses you have already incurred. Our capital is long-term and patient. There is no debt, no refinancing risk, and no repricing risk. Pricing is set at inception, with only a modest annual inflation adjustment, giving you certainty for decades and maintaining the ability to refinance should circumstances require. Now it goes without saying that no two investments or projects are ever the same, and as such, your next step should be to reach out to our CEO, Paul Brook, and his talented team. We are not constrained by geography and can pursue opportunities wherever they arise, provided we are comfortable with the legal and geopolitical risks of the location. We welcome all inquiries to explore whether your project or asset fits our strict investment criteria. Please note that this presentation is subject to the notices page on our website. For now, that is all from me. Thank you and all the best.